everybody. Thank you so much for stopping by today. You're welcome back. My name still remains Omode Sola. Now, in this class, we're going to be talking about something very, very important. But before we talk about those important things, let me talk about this important thing too. If you're watching this video, I have not subscribed. Oh yeah, hit that subscribe button. Oh yeah, hit it. Let's become. I'm really always happy to like when our family grows, right? And stand. So hit that subscribe button, okay, and make sure you share this video. So now let's go back to class. The important thing, the second important thing I said I wanted to talk about. Identifying the most suitable financial analysis method. This topic that we're talking about today, please, if you're doing any other thing, this is not the time to be doing any other thing. Focus because it's very, very important. Because like they said, if the purpose of a thing is not known, abuse is definitely inevitable. So you have to basically be able to know how to identify the most suitable method to use. Because if they're asking you A and then you eventually do B, no matter how beautiful or no matter how professionally structured, interpreted, recommended, concluded, whatever you did is, you will not get marks. So this topic is very, very important. So this is not a class that you do while walking on the road or while cooking. So this is a class that you do paying attention, like you listen to it, paying rapt attention. And my the comment section is always open. If you have any question, just let me know. If you actually have any video that you would like me to create, anything that you have challenges with, also let me know in the comment section, and I'll always be here to help you out. All right. So now identifying the most suitable financial analysis method. Now, what's the most suitable financial analysis method? We're going to be talking about that now. So the first thing now is that what? What is financial analysis? That's the first thing we should talk about, right? Because if you are saying we are identifying the most suitable financial analysis method and then we don't even know what financial analysis is about, then what are we actually doing, right? So now the first question is, what is financial analysis? What is financial analysis? So financial analysis is simply the process of what? Examining the financial statements of a company to assess its financial position, financial performance, and financial health. So basically, all we are doing basically is that we are assessing financial statements of the company, want to assess its financial position, want to assess the financial performance, assess the financial health. Also, and aside that, financial analysis does not just cover the financial statement alone. It goes a bit further. You understand? It goes a bit further. So financial analysis could also be assessing a project, a contract, a proposal, and then the financial analysis of ICAN case study basically is divided into three: the financial statement analysis, the financial data analysis, and the strategic analysis. So I used to say it a lot. Your ICAN case study requirements would always move around these three things: either financial statement analysis, financial data analysis, or strategic analysis. So always go around this. And that's why in my previous classes, I tried as much as possible to teach you all about financial data, financial statement. I talked about strategic analysis. I'll upload another video about strategic analysis soon. You understand? So please watch all those videos. Please. It's going to help you. Like, I'm chatted already, so I'm not here helping you, right? So it's going to help you. Dedicate time to just watch them. You understand? They are actually going to help you a lot. So the financial analysis. So today's class, we're going to be talking about how to know the suitable analysis tool. If you are doing a financial statement analysis, how to know which tool to use. If you are required to do financial data, how to know which tool to use. And the strategic analysis as well, how to know the tool to use. So that's basically what we're going to be talking about in today's class. I'm actually very excited. I hope you are as excited as I am. All right. So now the most stable financial analysis tool. So basically, before we start, I'll actually tell you all the tools that are actually possible, like the possible tools for each situation. So now, if you are doing a financial statement analysis, and now, like I said, everything I'm going to be talking about in today's class was not just Bedford form. Oh, I think, I feel, I guess, it all came from constant study and due diligence. I did my hard work. I've done my homework basically. So everything I'm going to be telling you today, and that's why I said earlier that today is a very, very this class is very, very important. You understand? So I'm going to be telling you facts. And if you're not sure, you can go and check it out. Yeah, go and check it out. I'm going to tell you facts. So usually, I'm using the word usually because based on the trend. Anything can change tomorrow. They can decide to do any other thing, but I'm going to be using the word usually very, very well because based on the trend of what's going on now. So usually the financial statement analysis covers the ratio analysis and the trend analysis. So most times when they ask you financial statement analysis, like they want you to analyze the financial statements, basically they just basically want you to either use ratio analysis or trend analysis. And how do I know it's a financial statement analysis question? Now, financial, I used to say this thing a lot that the terminologies that I used in ICAN case study are not just terminologies that ICAN just sat down and said, oh, what can we actually use? I feel, oh, this word rhymes. No. Financial statement analysis basically is just what analysis of the financial statement. So any question that requires you to analyze the financial statement, analyze anything associated with a financial statement is basically a financial statement analysis. So when you have questions like evaluate the company's performance, evaluate revenue, overhead, evaluate the performance of the company, all that is financial statement analysis. So most times the most appropriate tool is either trend or ratio analysis. Now I uploaded a video on ratio analysis. You can just check that up and to help you actually. Now, the second one is what the second possible requirement is what the financial data analysis. The financial data analysis. Now, what are the tools? We have what the net present value, the contribution analysis, payback, or merger and acquisition, basically. So that's just basically what they may ask you. Net present value, contribution analysis, payback, merger and acquisition. How do I know the most appropriate tool to use? I'm going to show you shortly. I already created a video on net present value, so you can also check that out as well. Now, the strategic analysis now, basically, that was just basically the use of models, the use of models. And they may not come directly to tell you, oh, use pested analysis. For instance, they can tell you something like, analyze the external environment. Obviously, you know that's pestle. Analyze the internal and external environment. What do you think that will be? Yeah, brilliant. That's what analysis, right? That's what analysis. So we're going to be looking at each of them one after the other now. So the first question is when let's bring this down so that we can look at it together. Now, the first question is when is ratio analysis the most suitable tool? Right. We said that the financial statement analysis can either be ratio or trend, right? So when do I actually know that financial ratio analysis is the most suitable tool? How do I know? What are the signs that I will see? Now, this thing I'm giving you for free, these are deep, 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 deep secrets. You understand? So please focus. So the first thing is the requirements. The requirements. So when you say requirement like assess the profitability, liquidity, financial strength, you assess something like evaluate the performance of the company from so year, then you definitely know you are tending towards ratio analysis. So sometimes the question may come very, very specific, like profitability. For instance, assessing the profitability of a company, that's basically profitability ratios, right? Assessing the liquidity, that's liquidity ratios. Assessing financial strength, or that's when you have the debt to equity ratio and all of that. Do you understand? So now, when questions like this come, you definitely know they're tending towards what ratio analysis. They're tending towards ratio analysis, and you're saying something like evaluate the company's performance. It's tending towards ratio analysis. Do you understand? So when you have something like that, you definitely know I'm smelling ratio here, right? So the second thing is that what the recipient of your report is also a determining factor. The recipient of your report. Now, let's take for instance, if you are an investor, for instance, you're an investor, right? And then you want to invest in a company, what will you be concerned about? Yes, you'll be concerned about the profitability of the company. Drink, this company, will they actually make profits? Because remember that it's the profits for the year that is either retained or paid out as dividend, right? So you want to know, do they actually make profit? Because if they don't make profit and I put my money there, that one stories will tell me, right? So you want to know, are they profitable? You want to know, do they have money? You want to know, oh, what is the earnings per share? What's the dividend per share? You want to know all that. So you definitely know that's ratio analysis. Do you understand? So, for instance, most ICAN case study reports, usually the recipient of the report is usually the board of directors. And the board of directors don't want to know everything about the company. They want to know if the company is profitable. They want to know how well we're doing in terms of being liquid. They want to know, okay, how is our capital structure like? They also want to know our efficiency ratio, our activity ratios, all of that. So that's why most times, usually the ratio analysis that is important. You understand? So that's the ratio analysis that is the most suitable tool because the recipient of your report also determines. Because for instance, if I am somebody and I don't even care about your profitability, I don't care about your liquidity, and showing me all that, I should understand like what's my business, right? So the recipient of a report is also very, very important. It's also very, very important. And I said that ratio analysis, I used to call ratio analysis a snitch. That's the nickname I gave to ratio analysis because it will open up every hidden financial strength, weakness, every issue, every major issue, everything to open it up. You understand? So ratio actually helps us to see beyond what we're actually saying. Yeah. So ratio analysis is really important in that sense. The next tool that they are likely to test is the trend analysis. The trend analysis. So the first one too is the requirements. Now, how do I know trend analysis is the most suitable tool? Now, the first one is what the requirement. The requirement also matters a lot. So when you have something like evaluation of the company's performance in previous 3 years. Now, the first thing I'll ask you is when you hear the word trend, what comes to mind? When you hear the word trend, what comes to mind? Right? So what comes to mind is basically when you maybe the trend. For instance, if you say what is the trend of dance, the trend of dance, you have something like, oh, we moved from in Nigeria, for instance, we moved from probably I don't know all those dance, I don't really know, but you understand how it moved from 2018, the dance that was raining, the dance that was raining in 2019, dance that was raining, you understand? Okay, what's the trend of the economic situation of Nigeria? Or what happened? You start looking back as per okay, what happened in the past till now. So when you hear the word trend analysis is basically saying you are assessing more than 1 year. So the first thing, my dear ACA, is that trend analysis, if you are doing trend analysis, the first thing is that there must be more than 1 year. So if you have a financial statement that is just 1 year, definitely, that's not trend analysis question. But ICAN would definitely test more than 1 year based on what the trend of things that have been happening. They always test more than 1 year. Do you understand? So when you say something like evaluate performance in 3 years, from this year to this year, in the previous 2 years, compare year 1, year 2, year 3, compare 2 years. That one is telling you you're looking at the trend of things, right? So over a period of time. And like I said here, usually trend analysis and ratio analysis usually go hand in hand. Hand in hand. So, but trend analysis, when you're seeing something like from this year to this year, from 1 year to another year, you have something like this. You definitely know I'm definitely smelling trend analysis here. Yeah, I'm smelling it. You understand? So, and most times when they ask trend analysis, they usually ask ratio analysis. So they go hand in hand. So that's how you know. That's the secret. Now, the second thing is that how do I know when it's the net present value? Now, like I said earlier, I've created a full video on net present value. You can just check that out. But how do I know it's net present value? Like this most suitable tool is net present value. The first thing, parameters. Before we even talk about the parameters, I want to say something very, very important. Now, net present value is that what's that? That means what? Yeah, determining the what? The in accounting, when you hear the word net, that means you are basically deducting something, right? Something minus something will give you net. Usually gross minus whatever will give you net. Like now, just like we have in our trading profit and loss account, we have the gross profit minus the expenses will give us the net profit. So something minus something gave us net in that sense. So when you hear what net present value, it basically means present value of outflows minus present value of inflows, basically. So present value, to not get the present value is determined by what? Discounting. You discount to get present value. Please, I've created a video on this next present value, so please watch it to give you insight. Now, present value. So if you see any question and they're giving you discount rates in that question, you definitely know that this one, in fact, this one is, you're not even smelling net present value in this case. This one is definitely a net present value question because discount rate is used to discount. Weighted average cost of capital, they can give you other names. Weighted average cost of capital is also called discount rate, it's also called rate of return. When you have something like that, you definitely know that what you are supposed to do net present value. So that's like the biggest indicator of net present value. And aside that, now you're seeing discount rate, you have held that. Now you're not seeing other information like initial costs, annual cash flows, annual inflows, probably you're seeing working capital, you are seeing scrap value, all that. You definitely know this is definitely net present value. So the parameters given actually would help you to know if it's net present value or not. So once you see discount rate, calm down first. I know you don't jump into conclusions, yes, but you definitely know this one is definitely net present value. And in addition, a capital investment project. So Net present value are usually used to assess capital investment projects. So when you have like projects that will last for a number of years, so you're having like a number of years, investments, costs, annual cash flows, the number of years, the project that will last for a period of time, you're having discount rates. And usually, net present value is used for a future project. You understand? So, and that's why we're doing what? We are determining the present value. And I explained this in the net present value class. Watch that, please, if you haven't. Now, we're determining the what? The present value. So, when you have like a future project, a project that will be done in the future, basically, you definitely know this is net present value. So, those are the indications of net present value. The next one is what? Contribution analysis. How do I know that I'm supposed to do contribution analysis? Now, net present value and contribution analysis, they go hand in hand. They go hand in hand. Net present value and contribution analysis, they go hand in hand. So when you have like you have every other thing. So let's create a scenario now. A scenario whereby you have every other thing. You have the annual cash flows, you have the sales, you have the variable costs, you understand, you have all of that, but you do not have what discount rate, then you know that that's contribution analysis. So let's look at the first one. So the parameters provided. Now, what's contribution analysis? Contribution analysis is basically saying determine your contribution and why. Now, in accounting, contribution is what? The sales minus the variable cost. So I don't know if you remember something like this, that you have sales. Okay, let me do this. You have sales, you have your variable cost, which will give you your contribution, right? Then you remove your fixed costs, which will give you your what? Your profits. This just basically, which will give you your profits. So this is just basically what we do in accounting, right? So you understand. So now in this case, if you have a question whereby they're giving you the sales, they're also giving you the variable costs, then they gave you like you're seeing something like fixed costs, you're also seeing something like contribution. In fact, that's tending towards contribution, because basically contribution is basically what? Contribution is basically the sales minus minus the variable cost, rather. The sales minus the variable cost. And please, I want to say something here. Now we have said that what? Contribution is what? The sales minus the variable cost. Like I'm saying it again, contribution is what? The sales minus variable cost. So if you have a question paraventure and you are having something like fixed cost in the question, that one is just a noise making factor. You're not supposed to use the fixed cost. Basically, you understand? You're not supposed to use the fixed cost because it's just irrelevant. So the variable cost is much more important, you understand, because that's like relevant cost. So we can have something like this: variable cost slash relevant cost. Let's just put it like that, you understand. So when you have something like this, definitely know they're telling you to do contribution analysis. That you definitely know they're telling you to do contribution analysis. And in some cases too, the question may look like net present value question. You may be saying something like outflows, inflows, you understand, and the likes. But then you have check, and you did not see anything like discount rates, you do not see any information about discount rate, then you know that that's contribution analysis. Because sometimes the net present value question may look like contribution analysis, and the contribution analysis question may look like net present value question. So what would differentiate it is that if you have discount rates, then you are definitely doing net present value. But if you don't have discount rate, then you know that that's contribution analysis, basically. And contribution analysis will give you things like sales, variable cost, and the likes, basically. So the next one is that how do I know that I'm doing merger and acquisition? Merger and acquisition question. So M&A, when they're asking you merger and acquisition, they'll go straight. They'll tell you explicitly. They will tell you that do merger and acquisition for us. You know, so you'll be told. So that one, the question is usually very, very direct. Usually very direct. So next one is that when do I know I'm doing models? So please, I use the capital letters here. Do models if and only if it is stated in the requirement. If and only if it is stated in the requirement. So if the requirements rather, if the requirement does not state that it's doing like models, please don't do models, because a major pitfall that examiners hammer every year is that candidates do SWOT analysis, person analysis when they were not asked to. You understand? So, and there's no time. Even the one they asked you to do, so if time is not sufficient, you're now doing things that they did not ask you to do. So, if they want you to do models, they will state it there. So, you can have a requirement like carry out the uh, analyze the external environment of the company, analyze the internal and external environment of the company. Some questions will come directly. Use value chain analysis, use benchmarking, use blah blah blah. Some questions will come as direct as that. So you will definitely know that this is a model question. So models and merger and acquisition, they are very, very straightforward, you know. But it's all those net present value, trend, and I may not really know. And then I've shared secret tips with you today. And I really, really hope you learned a lot. I really hope you learned a lot. Please, if you have not subscribed, please hit the subscribe button and share this video. Let me know in the comment section if you have any question or anything. Just let me know. Let me know how you felt after watching this video. Give me feedbacks, basically. And I'll see you in my next class. Have a lovely day. Bye.